All right, so let's begin the show, and we'll be talking about your investment strategies as far as gold and silver is concerned. I have very special guest with me, Mr. G. Chandrashekhar, commodity expert, and Anuj Gupta, head commodities and currencies, HDFC Securities. Good evening, both of you. And Chandrashekhar, sir, let me begin with you because as far as investing in equity is considered this particular year, a lot of experts say that you need to taper down your expectation. It cannot be a year like how, last 2-3 years you've experienced the kind of returns in your portfolio. You've seen portfolio ballooning with a lot of profits. Can we say the same about gold now?
Well, it's a tough question. I'll tell you what. Goldman Sachs, your Bank of America, all of them are so bullish on gold, talking about $3,000 plus. But with due respect, I disagree. At least in the short term, over the next 3 months or so, 4 months, say until June, in the first half of this year, I'm somewhat bearish on gold. I expect at least a $200 correction for 2 or 3 reasons. The principal reason is one, Mr. Donald Trump, who will occupy the White House on 20th of January. I am certain the first thing that he will do is somehow or the other stop the 2 wars that are going on. He will give Putin an honorable exit, stop that war, there'll be a ceasefire. Same will happen to the Israel-Hamas conflict and all that. And he will probably claim a Nobel Peace Prize for that. So once this war stops, there is a $200 minimum war risk premium in current gold prices, which will evaporate. And once that starts to evaporate, the speculative capital, which has boosted the price of gold, will also start to exit. This is the first reason. Second reason, very simply, is that because the US economy is so resilient, inflation still seems to be somewhat sticky. I expect the Fed will not rush into cutting interest rates. For interest rates will be cut, but very, very gradually, it will be fairly moderated. And the dollar as a consequence is likely to remain fairly strong. The bond yields are already quite attractive. And when you put all these factors together, easing of geopolitical tensions, slow pace of rate cut, better bond yield, strong dollar, and of course, central bank buying has been supporting gold in the whole of 24, and I expect a moderation. All that put together will mean...
Yeah, that was I was coming down to actually, because central bank demand and buying, what is the current status of that? Has it reached to a new high, or it's just been in the same trajectory?
No, absolutely not. I think it is
Okay.
We had a record purchase in 2022. On your show, I said I had forecast for 23 will be slightly lower, and it's at the same level in 24. I don't expect there'll be more appetite among central banks to build more reserve. There will be a decent amount of buying, but it's not going to increase dramatically. But at the same time, look at the physical demand. Jewelry demand, physical demand for gold is so weak in major markets like India, China, Turkey, and other countries. And because the economies of these countries, there are currency-related issues, income-related issues, etc. Therefore, both on the demand side, I see physical demand is weakening, and the war risk premium in the metal, in my view, is likely to substantially reduce, and therefore, at least in the short run, next 3 to 4 months, I see a downside risk to gold prices, but that probably is the time for investors to buy more gold as it comes closer to, say, $2,400 an ounce or around that level.
Sure. So clearly, as explained by you, short-term volatility with a downward bias. Anuj, do you agree? Do you have the same analysis?
Yes, Kavita, definitely in last year we saw a 21% kind of return in gold prices. But as we are on the same page that we are not expecting this year the same return, because dollar index is going higher. So that will impact negatively on the gold prices. But yes, definitely, as investment demand is there, central bank demand is there. Recently, we have seen that China has buying gold in last year, in last month also, and this month also they are continuing the buying. So that will impact positively. But Another round, if we check that the dollar index is gaining and Mr. Trump is going to take charge for their administration, that will little bit impact negatively for the gold prices. So we are expecting little bit correction. But yes, as the long term, if we talk about this year end, we are expecting gold may test again 79,000, 18,000 kind of levels.
तो तुम बात कर लो भाई तुमको
All right, that's clearly the outlook for the near term that we are talking about. But apart from that, yeah, Chandrashekhar sir, you want to say something?
No,
Yeah.
I was wondering if you would ask what is
Huh.
it? What would there be in the budget for gold? Would you like to ask
Exactly.
that
I was just
question?
coming down to that. I want to I wanted to know your expectations also, because I'm sure you must have made several proposals regarding the same. So,
Right.
yeah.
No, I haven't made any proposal. I'm not a trader. I'm only a student
Okay.
of this market. I don't hold any
Right.
trading position, but I will not be surprised if there is a hike in customs duty
Oh.
on gold import in this budget for two reasons. One, the last budget in July 2024, well, I would say the government was in a great hurry to drop the customs duty by 60% to about 6%, or from 15% to 6%. I think that was, in my view, unwarranted, and I'm on record. Now that prices are still high and our imports are still taking place, and government needs more money, more revenue, I will not be surprised if the 6% become either 9% or 10%. I won't be surprised. And given that the rupee is weakening, that'll be a double whammy: increase in duty, and of course weakening rupee will lead to much higher prices domestically. But the global prices, of course, as I said earlier, there is a potential for the global prices, dollar prices, to decline.
All right. Anuj, let's quickly talk about silver also, the similar kind of trend, or are you bullish on silver?
See, I am very little bit more optimistic in silver rather than gold, because the industrial metal demand is there, and we notice that silver is is taking breakout after the 14 years of consolidation. Gold touch the lifetime high, but still silver is not touch the lifetime high. So room is there in the silver, and industrial metal demand, and the silver demand is also increasing for the industrial metal as well. So I'm a little bit more optimistic for the silver side, and expecting silver may test again five figure, means 1 lakh or more than 1 lakhs in this year. But yes, definitely bullish trend is there, and the industrial metal demand is there. So I'm expecting that silver may again test five figure 1 lakh amount in this year also.
What are the triggers according to you for silver?
Yeah. Oh, Bilkul, I completely agree with Anuj. But let me
Sure.
give you some more specifics. Industrial demand for silver is at a record level. Whether it is electrical industry, electronics industry, or it is e-mobility for energy transition, solar panels, etc. There's a huge demand for silver. And for the fourth year running, silver market is in a state of deficit. And this deficit could possibly increase in 2025. Therefore, on the demand side, it's quite robust. Market is in deficit. The only way for prices to behave is to go up. Therefore, I am looking at the first half of 2025. Silver should trade between 29.5 and $31.5 an ounce. And in the second half, I see a potential for this metal to go trade between $32 and $34, with an occasional spike even closer to $35 an ounce, and very strong ETF demand. Last year, gold, we had ETF outflows, but silver had ETF inflows. I expect that trend also to continue in 2025. Silver industrial demand is 60% of the total silver demand. And therefore, I think it is going to become, it's a big opportunity for investment in silver.
Sure. So to summarize, it's time to buy even gold. Even there'll be volatility in short term with slightly a negative down trend, but then so far the triggers that we are seeing as far as gold is concerned is just a near-term outlook where we can see a slight volatility. But then, yeah, given the prices, it can be a time to accumulate. And silver, as both our guests are really optimistic as far as the prices are concerned and the fundamental triggers are concerned, we might see silver rising more than gold. Thank you so much, both of you, for being on the show and helping our viewers with their strategies in gold and silver today. Thank you so much. All right, time for a quick break, but then post that, let's begin our viewer queries section. We'll be joined by Gautam Kalia, who will be answering your financial portfolio queries live. Just in case you want to send across your questions live, you can do that on our WhatsApp number and email ID. So a quick break and post that. Let's get connected with our viewers.